Welcome back, ladies and gentlemen, for what is going to be nothing short of another jam-packed daily cryptocurrency market update. And if you are new around here and finding yourself on my channel for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 PM UK time every single day to help you guys stay up to date with the latest and greatest things happening in the crypto markets, but also the broader markets. And that's what we do in these updates. And of course, yesterday was a monumental day, and it very much went the way we were expecting it to, with the Federal Reserve lowering interest rates by 50 basis points. Now, we have previously looked at the returns over the past 14 times the Fed have initially lowered interest rates for the first time in an easing cycle, and the returns of the S&P 12 months later. And 12 of those 14 times, the S&P has given a positive return. Okay, we're going to talk about this to start the video off, because ultimately for us as crypto investors, what this affects is the dollar and thus liquidity, and that ultimately is going to signal a good time for risk assets generally, and crypto is going to be the best performing risk asset in the risk asset class. Now, we are going to be diving over to a report that was published by BlackRock yesterday that talks about Bitcoin and its viability as a diversifier in a portfolio, and they bring some really interesting things. We talk about crypto being correlated with the risk sector, and of course it is, but actually BlackRock in this report are highlighting its uncorrelation, and that being a unique benefit to Bitcoin. What they're kind of highlighting is a very interesting report. I'm not going to go too much into it. We'll just touch on it as this is a daily market update and we've got a lot to cover. We'll release a full video going through the report later on. But BlackRock very much put forward the argument that the things that are going to see Bitcoin do well are the things that are going to see risk assets typically not do well in regards to geopolitical uncertainty, US fiscal deficit issues, monetary supply issues, all of this kind of stuff, political tensions. That stuff typically isn't going to see risk do well, but it might see Bitcoin do well. So we'll cover that a little bit towards the end of the video. Of course, I absolutely want to start things off with what took place yesterday. As expected here on Allincrypto, the Fed did lower by 50 basis points. We were saying this before the probabilities were in favor of them doing so. If you look at how the Fed typically cut rates, it's never in a measured manner. And actually, one thing that you can derive from Jerome Powell's speech yesterday was that he's very much signaling that this is the start of more cuts to come. Now, why is this relevant to us as cryptocurrency investors? Well, because through interest rate payments or interest rates, monetary policy, they manipulate the dollar, which ultimately manipulates the markets. We saw a great example of this in regards to the JPY, Japanese yen, carry trade unwinding that took place, I think it was the 5th of August, was it? That essentially saw the Bank of Japan up interest rates for the first time in a long time, certainly my lifetime, strengthen their currency, and people had to readjust as a result of that because people borrow in that currency. You're about to see the adverse of that, so a positive effect where the JPY, they were going up in terms of interest rates. The largest central bank in the world is going down in terms of interest rates. So ultimately, you can see the correlation between interest rates and the dollar. And we know that interest rates are going to come down. Firstly, before we jump back onto the dollar, the 2-year yields, let me find the 2 years, currently has rates at 3.5%. They're at 5 right now, meaning, or they're at 4 3/4 to 5, meaning that there's absolutely room for around about a 1.5 cut still to come. I think this year you're probably looking at least another 225s. I think that's safe to say. And ultimately, this is going to start the easing cycle, which is going to lower the dollar, which is going to see all these liquidity cycles, the Bitcoin 4-year cycle, the PMI cycles. All of these things play out. I want to address this. Pigs fly, okay? Now, that statement I made up. Pigs don't fly, at least not to my knowledge, or any of yours. And I think factually pigs don't fly. However, we actually saw people making the argument that a 50 basis point rate cut was negative for the markets because it shows that the Fed are, that the economy's weak. Okay. The Fed have cut interest rates in the past based on a weak economy, ultimately to stimulate it. However, if you look at the economy right now, what is weak in the economy? Unemployment data? Unemployment's at the same place it was in 2018. Unemployment's not that much of an issue. The fear is that it's going to continue to uptick. So in terms of economic data right now, it's amazing how people can basically spin any narrative they want without actually being able to back up the fact. A 50 basis point rate cut is not negative. A pivot is not negative for the markets. That is an idiosyncrasy that we've dismissed. Go look at the past 14 times the Fed have lowered interest rates from the start and look a year ahead at where the S&P has been. This is a great move in the direction that we've largely been expecting. The Fed are going to continue to cut, and that was reiterated with Jerome Powell's message. On top of that, we also have a lot of targets for the dollar. Even on the short term, yesterday going into the meeting, we said actually we think it's going to be a positive result because you've got, and we'll drop down the time frames here. 2 hours should do us. You've got a dollar target to the downside. Real whiplash going on here, but I think this is ultimately going to roll, and you're going to see 99.64, and then this is ultimately giving confluence to what the dollar is in, which is a broader downtrend, and it coming down to the lower band of this channel. And we know that when there's dollar weakness, and we have every reason to expect that technically, fundamentally, in every which way, even looking at the FX pairs, there's been an element of dollar weakness in every single Bitcoin bull market. Dollar weakness 2017, dollar weakness 2020, 2021, dollar weakness 2013, 14. You know, you can go right the way back. You know, even back here, dollar weakness 2010, Bitcoin did well. Dollar's going to continue to be weak. This is going to see risk generally do well. And yesterday we spent a bit of time going into the markets and looking at some positioning. This is Bitcoin on the smaller time frames. Bitcoin as well is doing this, potentially looking for 94k. Right around, it's just broken out of this splitter. And this is just a pullback in a broader uptrend. So you've got technical confluence for the dollar to go down and technical confluence for Bitcoin to go up. And we've got that fundamental drive, which is the Fed signaling what they're going to do, or actually taking action in regards to what should support the markets yesterday. Give me a bearish outcome out of that without making it up and telling me that pigs fly. We're just waiting for this to resolve and ultimately see that further broadside up continuation. You know, we looked at Nvidia yesterday because, of course, there is a correlation. We'll get on to BlackRock putting forward the argument that we aren't correlated. We've got targets for Nvidia now of 184. This is broad trend continuation structure that you're setting up. And Nvidia's in a clear uptrend. What's crypto going to do in that environment? Crypto has been pulling back against the SPY. You know, if you look at something like the SPY, I think this is setting up very similarly. If you look at something like the US 100, I'm not sure what that is. Let's come back to the chart here. Again, we looked at this yesterday and we said, actually, this gives us reason to be bullish on the markets going into that cut. US 100, you know, markets are about to get rocking and rolling, guys. I am watching Bitcoin SPY. Get out of here. I don't think it's going to be too long before this turns around, and that's going to coincide with the markets doing well. And your Bitcoin dominance, I don't think, is far from turning around either. You know, I'm seeing a number of positive things in regards to the Bitcoin pairs. Gold very nearly at target. All systems go, guys. Yesterday, the Fed really just signaled that the plan that we've been sort of laying forwards is coming to fruition, and it's just a case of now being in it to win it. Unfortunately, in crypto, you have to sort of ride volatility. It's inherent with the space, but big risk, big reward. You know, that's the kind of saying here. So happy days, very happy with the sort of result that we got yesterday. Also yesterday, some great news that most people sort of missed is Bitcoin, a unique diversifier. This is by BlackRock. I'll release a full video reading all of this out to you guys and sharing some thoughts. It talks, and this is the most interesting graph in this whole thing for me, is it talks about, it puts forward the argument, the whole paper is about Bitcoin being a diversifier in your portfolio. You know, that's what alpha is, when you can find that uncorrelated asset that does well and will ultimately minimize your downside through diversification and uncorrelation, but maximize your upside. And it puts forward the argument that we look at Bitcoin in regards to being a risk asset. It puts the argument that it's not actually a risk asset because it kind of doesn't work to the models that you would typically weigh risk assets up on. So it is now with what we're looking at. But actually, if you look at what Bitcoin was designed to do, it's essentially designed to work against the system, not with it. And actually, there might be an uncorrelation there that is desired for a portfolio. It's kind of a bet on fiscal recklessness, deficits, downturn, geopolitical tensions. It's kind of a bet on all of those, if you will. And it puts forward the argument that, okay, yeah, you can find a correlation just like with the JPY unwind, but that's just short term as a liquidity grab. But ultimately, these things generally are quite good for Bitcoin. Great article. Like I say, I'll release a full video on this later on today. I'm still editing it. US-Iran escalation. It looks at the 10-day return and then the 60-day return. What you find with all of these instances is actually Bitcoin essentially does well on the back end of them in regards to overperformance. And you could kind of almost perhaps trade this as a trade idea, is you want to buy Bitcoin on bad events because it bounces back really strongly. So we're kind of rambling now, guys, but this was a really interesting article from BlackRock, really bullish side. The largest asset manager in the world is essentially, releasing a report called Bitcoin, a Unique Diversifier, why Bitcoin appeals to investors lie in the detachment from traditional risk and returns. It's also interesting for us to highlight because we cover Bitcoin as part of the kind of risk system or the risk model. That's certainly the case. We've got lots of evidence for that. I think it's going to continue to be the case, but actually I think, if you look at what Bitcoin was designed to do, it was kind of designed to work against the system, but we'll do a longer video on that. So it's all systems go, really. When we look at the markets, we're very, very bullish on all markets. We're bearish on the Dixie, which is going to drive those markets, which is going to be manipulated or is being manipulated through central bank policy. A bit of a divergence between gold and Bitcoin I'm noticing right now as well. I think this will sort itself out eventually. But gold very nearly at that target that we had for it all the way back here. Stick around, guys. On that note, I'm going to love and leave you. We've got lots of videos coming out on altcoins. I think altcoins are in a good generally position. It's just going to depend on Bitcoin sort of ending this pullback, which I think we're seeing positive signs of in regards to potential small patterns, taking that midline of this pullback. It's now just time to work your way up and see that broader continuation. And we've looked at a lot of charts that were where Bitcoin is today and that have gone on higher and that set up in a similar fashion that Bitcoin currently is. So that's it from me. Always a pleasure, ladies and gents. I'm going to see you all in the next one, hopefully. On that note, I'm going to love and leave you. Thanks for watching, guys. See you in the next.